Hello everyone and welcome back to the channel. Today we're covering a major global story that is impacting oil prices, stock markets, inflation, and economies around the world. Oil prices have suddenly dropped after reports emerged that the United States and Iran have reached a deal that could reopen the critical Strait of Hormuz. This development has sparked optimism across global markets and raised hopes that the recent energy crisis may finally begin to ease. But why is the Strait of Hormuz so important? Why did oil prices fall so sharply? And what could this mean for countries like India, the United States, China, and Europe? Let's find out. The Strait of Hormuz is one of the most important waterways in the world. It connects the Persian Gulf to major international shipping routes and serves as a critical pathway for global oil transportation. Nearly 20% of the world's oil supply passes through this narrow route every single day. Because of this, any disruption in the Strait of Hormuz can immediately affect global energy prices. Many experts consider it the most important energy choke point on Earth. Earlier this year, tensions between the United States and Iran escalated dramatically. As the conflict intensified, shipping through the Strait of Hormuz became increasingly restricted. This created serious concerns about global oil supplies. As a result, oil prices surged sharply. Investors feared that millions of barrels of oil could be removed from the global market. Governments, businesses, and consumers around the world felt the impact through higher fuel prices and rising transportation costs. Now, after months of uncertainty, a major breakthrough appears to have arrived. Reports indicate that the United States and Iran have agreed on a framework deal aimed at reducing tensions and reopening the Strait of Hormuz. The agreement is expected to include measures that restore safe shipping through the region and allow oil exports to resume more normally. The announcement immediately changed investor sentiment around the world. As soon as news of the deal emerged, oil prices dropped sharply. Brent crude oil fell significantly, while U.S. crude prices also moved lower. The reason is simple. Traders believe that reopening the Strait of Hormuz will increase the flow of oil into global markets. When supply fears decrease, oil prices often move lower. Markets are now pricing in the possibility that oil shipments could return closer to normal levels. The impact wasn't limited to oil markets. Stock markets around the world also reacted positively. Investors welcome the possibility of lower energy costs, reduced inflation pressures, and greater economic stability. Major stock indexes in the United States, Europe, and Asia moved higher following the news. Technology companies, transportation firms, airlines, and consumer-focused businesses all benefited from expectations of cheaper fuel and lower operating costs. This shows how closely connected energy markets and financial markets really are. One country that could benefit significantly from lower oil prices is India. India is one of the largest importers of crude oil in the world. A large portion of India's energy needs depends on oil shipments moving through the Strait of Hormuz. Lower oil prices could help reduce India's import costs. This may support economic growth, help control inflation, and reduce pressure on consumers. Lower fuel prices can also benefit transportation, manufacturing, and agriculture sectors across the country. However, experts caution that not all risks have disappeared. The agreement remains fragile. Several political and security issues still need to be resolved. Even if the strait officially reopens, oil exports may not immediately return to normal. Shipping companies, insurance providers, and energy producers will need time to rebuild confidence and restore operations. Many investors are now asking whether oil prices could fall even further. Some analysts believe that if oil supplies continue to recover and global demand remains stable, prices could move lower over the coming months. Others argue that geopolitical risks remain high and that prices could rise again if tensions return. Several financial institutions expect oil prices to stabilize rather than collapse completely. This is because global energy markets remain sensitive to political developments in the Middle East. The reopening of the Strait of Hormuz affects much more than just oil. Lower energy prices can help reduce inflation across the global economy. Businesses may face lower transportation and manufacturing costs. Consumers could spend less money on fuel and have more money available for other purchases. Central banks may also face less pressure to keep interest rates elevated if energy-driven inflation continues to ease. This is one reason why investors around the world are paying such close attention